Hi, welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. A lot more taking shape is by way of participation. We saw cyclical stocks moving up to the forefront, joining the strength that is already being exhibited in technology. And that broadening out is good news for the markets. So we're going to take a look at that. And then also where the broader markets closed for the week and those money flows, where they are shaping up beneath those sectors. So from here, let's go ahead and take a look at some of those more impactful news that drove price action last week. First up, earlier in the week, we did get durable goods orders, and it showed that the manufacturing sector remained rather flat, but there was one bright spot, and that was orders for new autos. So I'll share with you the impact that had on select areas of the market and select stocks so that you can know how to parlay impactful news going forward. Also, last week, we did get news that May new home sales surged for the third month in a row. And of course, that was very good news for housing stocks. However, they were a little bit flat. But again, those industries and areas that provide services to the housing industry fared quite well last week. Fed Chair Powell was on the move. He spoke at two separate events, and his comments remain rather hawkish. By that, I mean that he is on the lookout to do whatever it takes to get the inflation number down to their expected and target rate of 2%. We'll talk about that as well. And then also, we did get very good news relative to inflation. Today, the core PCE data came in below estimates, and that's very good news. This is a very closely watched inflation metric by the Federal Reserve, and you'll see the impact that that news had on the markets today. Now, next week is a holiday week. Monday is a half day, and Tuesday the markets are closed, but there is going to be important data that will be released next week as well. On Wednesday, the Federal Reserve will be releasing their notes from their most recent FOMC meeting. That's been known to move the markets depending on their comments relating to their rate hike policy. On Friday, we will get monthly employment data, and that's going to be very closely watched. Of importance will not only be that employment or unemployment rate, but also wage increases or decreases. The Federal Reserve, of course, does not want to see wages increased because that will in turn increase spending and potentially heighten inflation again. So let's go ahead and take a look at those broader markets and see where did we close the week. Here we are with a daily price chart of the S&P 500, and you can see that we had a nice rally up about 2.5% following last week's pullback. We did enter the week with a rather ominous outlook, certainly from my work, because we had entered into an overbought position in that RSI. I'll share with you a chart in a minute as it relates to historical precedents and what that can lead to. The good news is that the markets pulled back very closely to this 21-day moving average, and we're able to resume their uptrend. Today's gap up on that nice inflation data that was recorded. And then we do have positive RSI and positive stochastics. So from here, let's go ahead and take a look at a longer term view. And here we are with that longer term view of the S&P 500. This is a 3-year daily price chart. And taking a quick look, when that RSI gets into an overbought position, oftentimes it can lead to quite a lot by the way of a pullback. And the fact that the markets remained resilient despite talk of potentially higher interest rates is very constructive. From here, let's go ahead and take a look at the equal weighted S&P 500. And the reason for that is because last week we saw a very nice move into energy, basic materials, and industrial stocks, which the sectors were all up over 4%. And we did also see vibrancy in technology. In turn, this helped this equal weighted index where each of the areas have an equal weighting as opposed to a very focused index that looks at heavy-weighted FANG and weighs that in, and we can see that the equal-weighted S&P 500 is in a nice uptrend. This is what you want to see, a nice broadening out among the markets so that we can continue this nice rally that's shaping up. So from here, let's go ahead and take a look at the 11 underlying sectors in the S&P 500, and I've sorted it in descending order with that RSI, a 2-month daily price chart view. Up here in the forefront, industrials, which had been in this middle area, moved up to that very first area, exhibiting superior outperformance. And we can see that the group is up here at this new near-term high, and a weekly chart does reveal that industrials are at an all-time high. The reasoning here is we are seeing particular strength in transportation stocks. That's going to be airlines, autos, and other areas. Also, add-on plays to the strength in housing stocks. A number of industrial companies that provide products to these new home builders are also on the rise. From here, we can take a look at other areas at the forefront, and it is growth. We can see consumer, discretionary, technology, and also communication services. They did falter a bit. It was the communication services area was down less than the markets, but certainly up here at the forefront. From here, we can look at financials. Financials had a very sharp rally this week, up 3.3%. This is all about the Banking Regulatory Commission talking about the 12 main banking stocks that are now meeting their liquidity deposit requirements, and that's very good news. We saw JP Morgan and other major banks perform quite nicely last week. So from here, we're going to take a look beneath those individual sectors and take a look at some of these more impactful from my work ETFs as a way to get even more of a sense of where the money flows are taking shape, all with an eye toward helping you prepare and participate in those stronger areas. So up here at the forefront, IGV, this is the tech software ETF. It had hit a new near-term high about a week and a half ago, and we can see in line with the broader markets, it did pull back very orderly to this nice 21-day upward trending simple moving average, taking us out of this overbought position with that RSI up above 70 and resuming its uptrend with a move above this 10-day simple moving average. Semiconductor stocks and had an excellent week after faltering the prior week. This particular group was up 5%, also resuming its uptrend coming out of an overbought position. And some of the stronger names in both of these areas are smaller cap stocks. And I will share with you a look at the IWM here, that's that Russell 2000 index, and you can see a sharp push higher, up 4% this week. Very interesting to see a resumption, and again, a number of beaten down names in this area are on the rise, as are growth areas, so broadening out among those small caps as well. I talked about consumer confidence resuming its strength. Here's a view of the S&P 500 retail ETF XRT. The group was up 3%, so vibrancy there as well. And as we continue to move through, you want to be aware of some of these other areas in the weaker quartile. I talked about bank stocks. The group regional banks were up 3.7%. However, not enough for the group to resume this downtrend reversal that had shaped up in the beginning of June, faltering here. So not quite ready for prime time with those smaller bank names. From here, I do want to take us over to a look at the mega cap FANG stocks. Not all of them participated with that broader market rally last week. They weren't up quite as much. But what I've done again here is added that RSI. And as a benchmark, you do want to be aware of how these mega cap names are performing. Where is the strength? Where is that strongest stock? And certainly up here at the forefront is Apple. This is one of the names from my MEM Edge report. And take a look. It's been a real uptrending stock. We can see pullbacks to that 21-day have been a buy point as we continue to rally. The rally gets stronger so that pullbacks to the 10-day become your buy point, and the stock in a very confirmed uptrend. This is all about the move into consumer-related stock, with Apple also announcing new products, and the stock continues to power to new highs. Let's go back to that view of these mega cap FANG names, as I continue to call them, and we'll take a look here at Netflix. This was an outperformer, up 4%, but this is what you want to be on the lookout for when stocks hit a near-term high, such as Netflix, overbought with that RSI, and in line with the markets, a nice pullback to that 21-day simple moving average. From my work, as the stock ascends and closes above this 10-day, that is an ideal buy point as the stock re-enters an uptrend. Tesla did have a pullback last week. Earlier, Goldman Sachs on Monday, as well as several other Wall Street firms, downgraded the stock quite simply because of this strong rally. But the company is on track to record record sales of cars, auto deliveries in the second quarter. So we can see again that nice pullback to the 21-day, not a whole lot of momentum with this move higher. The Tesla was up about 2.5% in line with the broader markets, but certainly constructive. Let's go ahead and move on. Take a look. Amazon did underperform last week despite an upgrade today. It was up 2% today. Major Wall Street firm really bullish on the company's prospects for their Prime, 2-day Prime event that's going to take place in July. And then as we move forward, we can take a look also at Alphabet, and this stock has been a real underperformer of late. You can see it did pull back to this 50-day. Also, all about analyst outlook. They are not as convinced that Alphabet is set up to benefit from their participation in the adoption of AI. So you can see that it is finding resistance at these downward trending moving averages. From here, I did want to take a look with you at an area. We talked about industrial stocks and some of the areas that are stocks that are being impacted. Last week's durable goods order number that talked about the auto sales of new autos. And take a look here at GM, General Motors. This stock had a very significant rally last week on the news. Ford also in a nice uptrend. And also we can take a look at a weekly chart of Ford and see that it is poised to break out of this 2-year base. Very constructive price action. So when you see a move into particular areas of the market because of sound fundamental news, from there, I find it very helpful to then look at potential add-on plays, companies that provide products to that particular area that is seeing growth. So in this case, with, for instance, Ford and General Motors, really you need to go no further than take a look at some of these steel stocks, and certainly U.S. Steel would be in that category. And we can see the stock is in the throes of reversing its downtrend, a move above each of these moving averages. Very constructive there. And another company that also provides products to those auto manufacturers and is in the basic materials group, which was the top performer last week, is PPG. And this is a company that provides auto, glass, and plastics and other materials. And take a look. The stock experienced a nice base breakout, hitting a new high, and your momentum is still trending upward, but at a low level. So there is more room for higher highs here. However, I would need to see a pullback given its extensive move above that 10-day simple moving average. One last steel stock or steel related name that we can look at is a smaller stock, Carpenter, CRS, and this stock also experienced a nice base breakout, nice heavy volume, momentum shifting upward with both that RSI and that MACD. Another item I wanted to share with you is the concept of that pullback. And I did share with you certainly software, semiconductors, in addition to the broader markets, experiencing a pullback and then recovering from that pullback. So from here, let's take a look at an individual stock that had a nice downtrend reversal last week. This is Rambus, a semiconductor stock, RMBS. The stock experienced an overbought position. This is a rally that was in line with NVIDIA's very strong numbers, pulled back, almost made it to this 50-day simple moving average, but then on Thursday, broke above both its 10 and 21-day simple moving average. Super nice volume here. Your momentum shift here reflected in that RSI trending upward into 50 and above. So very constructive. Now, if we can get this MACD black line up through the red, that would be a third, yet another very strong indicator that this pullback has in fact been reversed into an uptrend. From here, let's go ahead and take a look at a couple of names in the industrial space. We were looking at basic materials, but industrials were also top performers last week. And here is a company that not many would think of, but it is a supplier to not only auto, but aerospace, which is another strong area in industrials. And this is Honeywell. We can see that the stock did experience a base breakout earlier in June, pulled back, but now has re-entered its uptrend. From here, I'm going to go ahead and add a 5-day simple moving average because you want to have a benchmark, and that is now that blue line. If you would like to enter the stock, a pullback to that 5-day at 205 could be an ideal buy point. You can see with historical precedent, when the stock gets going, you could see really some nice outperformance in that particular name. And last up with the broader markets, the S&P 500, I did fail to mention that it is very close to really catching up to this November 2021 high. At this point in time, we are about 7.5% from hitting that prior high. So yet another bullish characteristic for the broader markets. I'm going to leave it at that. Everyone have a fantastic weekend. Enjoy the holiday next week, and I'll look for you again here next Friday.